Here's the biggest misconception when it comes to owning ETFs. People think that you own the stocks in the ETF. You do not own the stocks inside the ETF. What you're doing is investing in the ETF, and the money that you invest in the ETF, they're allocating the money based on who they feel are the best performers in the stock. So you can go look at the top 10 holdings inside of the ETF, and that'll tell you how the company, how the fund is allocating their money. All right, fam, listen, so today we're gonna talk about why momentum ETFs outperform the market, right? And so momentum ETFs are, matter of fact, before we even get into what they are, let's just talk about what an ETF is. For all my new people, one of the things I gotta always do is remember, y'all coming to me on so many different levels of being in the game. Some are on first grade, some are on sixth grade, some are in middle school, some in high school, some in college, right? And so even my people that's at the top, you might need a little refresher, right? So when we talk about ETFs, we are talking about a group or collection of stocks that may perform a certain way, may have similar products and services, or may be in the same industry. I like to think about it and use this analogy of the potato chip aisle. So when you go to the store and you are looking in the potato chip aisle, you don't just see potato chips, right? You may see pretzels, you may see Pringles, you may see popcorn, you may see sunflower seeds, but they all are on the potato chip aisle, right? And so that's how we think about ETFs, right? And so today we're gonna uncover some things about momentum ETFs, which I think is pivotal for all my people that's chasing growth. Now, y'all know one thing, Trap loves growth, right? I'm not a firm believer in the dinosaur stocks of the past. If they not evolving their business model, I ain't rocking with them. Like, growth is where the money at. You know what I'm talking about? When we look at the multi-billionaires in this world, they chasing the growth. The only one that ain't chasing the growth like that is Warren Buffett. You know, he's just in a league of his own. Everybody else chasing growth, right? So that's what we want to do, right? But before we get into that, man, I want you to I want you to subscribe to this channel. Remember, that's not me in the chat asking you about WhatsApp, and that's not me in the comments telling you to, go to this. That ain't me. I don't ask y'all to do none of that, right? So don't get caught up in that, y'all. All right, so let's get into this momentum ETF. So let's just look at some of the key characteristics of this ETF, right? So we'll put keys. Oh, we're gonna do this. We're gonna do this. Keys to the vault. We're gonna go with keys to the vault, right? That's important for us to see. So one of the things is they focus on, watch this, price performance. It's one of the things they focus on. And the reason why they focus on price performance is because the momentum ETF is actually based on trends. So unlike normal ETFs, right, your regular ETF may be based on the best performing stocks in this, or what stocks have the right PE ratio, or so all of those things. So another characteristic of this ETF is they're focused on price performance, meaning how has the stock performed over? Watch this. The last 6 months. Within the last 6 months, how has this stock performed? That is super important for this momentum ETF because this is momentum. Like, what have you done in the last 30 days, 60 days, 90 days, or 6 months, right? That's gonna be essential because the key to this is get stocks that are performing. It gives you exposure, and it de-exposes you to stocks that are under. Now, and here's why that's important, because here's what we do know. Some stocks can perform well in the first half of the year, right? Some stocks may perform well in the first quarter. Some stocks may perform better in the third and fourth quarter. Understanding how stocks perform based on what's going on, watch this, based on what's going on in the economy, or based on, watch this, seasonality, right? So here's what we know. We know when we get into that latter part of the year, that third, fourth quarter, we know that what's coming up. Black Friday, Christmas, Thanksgiving, all these sales, spring sale, fall sale, not spring sale, fall sale, and all of these things happen in the end of the year, right? Whereas trips to Disney World may not be as popular in the third and fourth quarter because it's getting cold. You know what I'm saying? So these gonna focus on that. Who's performing well based on what, right? Some companies may perform well in the first quarter of the year. People got their taxes. That may run through that January, February, March, or that April, May. Like whatever that is, all of this comes into account. So economy and seasonality. So another thing we're gonna focus on right here is, watch this, growth trajectory. So what does that mean? So this ETF is also focused on growth trajectory, meaning how are the companies that they're gonna have inside of this ETF, they are picked because their growth trajectory is strong, meaning from here to the next 6 months, 12 months, it is designed for these companies to grow at a certain percentage moving forward. That's essential to them, right? Inside of this. Another one is, watch this, it can be growth opportunities. So what is the growth trajectory? What is the growth opportunity? But I also want you to understand that these can be volatile, right? And the reason is because they're going to be looking at, okay, this stock is not moving. This stock is not going to cut. All right, 6 months, we're taking this out, moving it forward. Your average ETF will probably, it's called passive investing, they will rebalance once a year. With a momentum ETF, you can actually see them rebalance once a quarter, every 6 months, because their goal in these ETFs is to stay actively following momentum. Okay, Trap, let's talk about something right quick. What are some of the ways that they track down this, right? So one of the ways they track down things is, watch this, all my traders, moving averages. They're looking for stocks that are consistently above that 50-day. They look, because if you're above that, that means you're moving, right? So a lot of stocks can stay over their 200-day, that 150-day, but they're looking for companies that are always consistently above that 50-day. Another thing they're looking for, I wrote this down, is, watch this, historical returns. Now, why is this important? So they're looking for stocks that have historically returned well year over year. That means these companies have a, what's the word I'm gonna use here? A history of beating the market, outperforming the market. Probably not every year, but they have, out of 8 of the last 10 years, something like 12 of the last 15 years. So that's gonna be important for them too. Another thing they look for is, watch this, RSI, Relative Strength Index, meaning this RSI is telling us, is the stock trading up? Is it trading down? Is it strong? Is it weak? In the way that it's moving, these things are important. And lastly, all my traders, it uses that MACD, right? So these are 4 things that the stock uses, the company uses, the fund uses to see what the trend is. Now, the 2 that's most looked at is, watch this, it's the Nifty 200 and the Momentum 30, right? Those are the 2 that is always used the most, the Nifty 200 and the Momentum 30s. These are important for you. So if you're in that group and you're looking for that growth, but here's what we love about it. It gives you growth. Watch this word I'm about to use. Without all of the, it gives you growth without all of the risk. Right? Now, if y'all like me, the risk is why you play the game. If you like me, you love the risk, but everybody ain't like Trap. And that's not a bad thing, because we all got a different risk tolerance, right? For those of my people who are growing in risk tolerance, that momentum ETFs, that's your homework. I want you to go look up 5 momentum ETFs, look at 2 of them, and pick 1 of them. Say it again. I want you to go find 5 of them, take 2 out of the 5, and pick 1. And you want to see who's returning the best. You want to understand. Now, here's the biggest misconception when it comes to owning ETFs. People think that you own the stocks in the ETF. You do not own the stocks inside the ETF. What you're doing is investing in the ETF, and the money that you invest in the ETF, they're allocating the money based on who they feel are the best performers in the stock. So you can go look at the top 10 holdings inside of the ETF, and that'll tell you how the company, how the fund is allocating their money, who they believe in the most, who they believe in the least. And that is a great way to break down and get into these momentum ETFs. Now, these momentum ETFs, oftentimes, they are outperforming the market because they are only focusing on trends. I'm not saying they always outperform the market. That'll be me lying to you, because sometimes you already know the more active you are in this game, the higher you increase your chances of losing. So that's why I say what they are doing is they're giving you growth without all the risk, because they're still chasing growth, but they're not taking all the risk of one or two individual stocks. Normally gonna have about 100, 150 stocks in it, which is good. One of them that I know for sure of is the SPMO. It actually has about 300. So you wanna look at that and take that into account, man. Listen, man, tell me in the chat how you feel about it. Y'all know I like to keep these videos super long. I like to keep a number. We give you the bread and meat so you can eat. You know what I'm saying? We give you the bread. We ain't trying to fluff. We ain't trying to exaggerate. So listen, man. Tell me in the chat how you feel about this. Tell me in the chat if we can help you. Also, man, let's get to some of your questions in the chat so we can turn that into comments, so we can content, so we can help y'all out even a little bit more. Y'all know our goal and our just mission is to help you all like build wealth one share at a time, be more confident in the market and your ability to see great stocks and make great investments. Most importantly, our biggest goal is to help you create legacy and buy back your freedom. It's your boy, the Wall Street Trapper. Make sure you like, make sure you subscribe, and let's check out our show each and every Tuesday called Trapping Tuesday on the Wall Street Looks Like Us Now network. It's your boy, the Wall Street Trapper, man. I'm out.